Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Jonathan Ferro, along with Lisa Abramowitz and Anne-Marie Hordern. Join us each day for insight from the best in markets, economics and geopolitics. From our global headquarters in New York City, we are live on Bloomberg Television weekday mornings from 6 to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.
We begin this hour with stocks looking for a third straight day of gains. Darrell Cronk of Wells Fargo with optimism ahead, writing this: we expect stock prices to march higher by year-end, driven primarily by earnings growth that should broaden to more cyclically oriented areas. Darrell joins us now for more. Darrell, good to see you.
You too, John.
Bit of heat coming out of the American story. It's not bad, just a little bit of heat coming out. ISM services, job openings, we'll get claims later, payrolls tomorrow. Is that a good thing?
I think it's a good thing. You want that economic growth. I mean, we walked into this year thinking the economy would run hotter than most of our friends up and down Wall Street, right? So we were a good half a point above in economic growth. We thought rates would be higher. We thought inflation would be meaningfully higher than the consensus. We were almost a full point ahead of everybody else on year-end CPI for 2025. And we think earnings will deliver. I mean, you're already seeing it here in the fourth quarter. We're on a run rate of about 5% revenue growth and just over 10% earnings growth. 5% revenue growth is the real element, I think, right? Because you can drive that down, in operating leverage through the margins and straight to the bottom line. So if you can maintain that kind of revenue growth and get decent nominal growth, let's call it 2.5% GDP growth with we're going to say 3 to 3.5% inflation. Our year-end target's 3.3. That's 5.5%, 6% nominal.
If you think that the economy was run hot last year, is some of the uncertainty that we see right now coming from policy that hampers corporate spending, is that a feature, not a bug, to help with the disinflationary process where otherwise some of these pro-growth policies could be somewhat inflationary?
I guess the way we've thought about it, Lisa, is when the dust settles at year end, the positive policy impacts need to outweigh the negatives, right? And you've got both ends of it, right? So you've got tariffs and immigration you can call negative, and you can call deregulation and tax cuts positive, right? We haven't got to the latter yet, right? We're still kind of, stewing on it. We've been all about, early days, tariffs, what we do, control of the border, all that stuff. So ironically, the markets have weathered that quite well, right? I mean, we're sitting here in a tight band, whether you look at the stock market, the bond market, right, which we're talking about with the 10-year.
Thank you.
I mean, remember that, when the Feds first started cutting rates in September of last year, September 18th, the 10-year was 370, right? It's 445 today. All of that's term premium, right? Because the long end of the curve is term premium, a growth premium, and an inflation premium. Almost 55% or 55 basis points, so that's term premium, which is just a function of the uncertainty around the policy.
Okay,
right?
so if you do get some of that term premium taken out of the system, if you have longer term yields return to sort of where they were back on September 18th, how much is that part of your call for the broadening out? How important is that to see the rotation out of just some of the Magnificent Seven stocks into the rest of the index?
Well, certainly. So what I would say is this, like when you think about 2025 and what has to happen, you've got two fives that need to happen. 10-year needs to stay below 5%, right? Unemployment rate needs to stay below 5%, right? Earnings growth needs to deliver, and earnings breadth needs to broaden out, to your point. Inflation needs to stay less than 3.5%. The dollar, if you want to measure it by the DXY, needs to stay below 110, right? And the positives of policy need to outweigh the negatives, right? If you get those things to happen, I think you're in a good place and markets can do quite well. Any one of those spiking above some of those thresholds start to inject risk into outlooks and the system, basically.
I want to pick up on your point about tariffs and how you're saying the market's weathering it pretty well. But isn't the market just pricing in the fact that there will be 11th hour deals like we saw with Canada and Mexico?
Yeah, I mean, I think you have to separate, right, the old adage of like, you got to take President Trump seriously, but not literally. We're learning that quickly, right? Not all tariffs are created equal, right? Remember Trump 1.0, the tariffs were very surgical, right? It was washing machine parts, solar panels, and steel and aluminum. This time they're very broad. They're like a stick, right? 25% on Canada, 25% on Mexico, 10% on China. They're at the country level, right? So we're using the emergency powers instead of 301, 232 powers this time, right? Which is a very different equation. I think when it's all said and done, the Canada, Mexico, and call it the friends tariffs, including the Eurozone, are more about leverage and getting what you want. China is more about geopolitics, right? That's where the real rub is with China. And I would expect the durability of the Chinese tariffs to stick and stay. And that means very specific things for certain industries, right? We still get most of our tech hardware and a lot of our semis from parts of China, right? Autos are a big element there. Metals, energy prices, those are the areas. So it's going to come down to those segments, sectors, and industries where the tariffs are going to matter as they get applied. And
are you concerned at that point then about inflation rising? Because this is the opening salvo when it comes to Chinese tariffs.
Yeah, I mean, as I said, I think the inflation is, you can call it stickier, you can call it more durable, whatever you want to call it. If when we walked into this year, the rest of the street said, if you measured U.S. CPI as they were saying 2 to 2.5, we were at 3.3, right? Which is that full point ahead. Which is why when you go back to Lisa's 10-year, I know we got to keep coming back to this, which is why our 10-year, sorry, John didn't
choking on my water.
Yes.
She doesn't own the 10-year bond, but carry on.
Actually,
well,
so
it's why we have the 10-year at year end this year at 475. Like, we don't think, when we were doing the math, right, about everybody else was in the threes on the 10-year, right, for year-end 25. You can't make that math work, right? So I think rates are higher. I think inflation is more durable, and that inflation premium as the year goes on gets stacked into the yields.
Scott Besson needs to talk to Bramo about Bramo's 10-year yield.
Well,
call me up.
I spoke to an aide last night, and they said no. He watches everything, every indice. They're like, also he looks at the barrels on the market. He wants to know where oil is every day.
I have no doubt about that. But I think coming into this year, just bigger picture, we thought maybe because they were going to run this hot, there would be a risk that the deficit would get away from them. The Treasury yields would run away as well. January, yields started to push up back towards 5%. We've retreated by 40 basis points. When you hear the Treasury Secretary say things like, I'm focused on the 10-year yield, how much comfort do you take from that? Because we talked about this to close out last year. Would they be constrained, regulated by stocks or regulated by bonds? I think a lot of people thought that maybe they might be regulated by the bond market. Do you take any comfort from that?
I do think that's the right focal point, right? Rates matter in this environment because it matters for equity valuations. It will matter ultimately for earnings. It matters for small caps, right? So look, there was a lot of short positions sitting right on the 4.5% line on the 10-year that scrambled to cover, which is why we ended up at 440 yesterday on the back of the Treasury refunding, which was no news, right? And we didn't see, Treasury Secretary Bassett turn around and say, I'm going to start layering out more and heavier auctions in the 10 and 30 year, right? The 3, the 10, and the 30 were all spot on where expectations were and have been for the last 4 months. So this whole idea that they're going to stop issuing as many bills and start issuing more long bonds may be in the future, but it's not in the current, right? And if that happens, then you start increasing supply, right? The risk you run is the auctions get sloppy, John. And we saw that back in October of 2023 where there just wasn't enough demand. Everybody was crowding to the short side of the curve on the demand, and the bid to cover ratios on those long auctions were messy.
And then Yellen made some changes, and it looks like those changes might be sticking, at least for now. Darrell, it's good to see you. Darrell Cronk there of Wells Fargo. Joining us now is Ed Mills of Raymond James. Now, Ed, welcome to the program. I wonder what consequences this might have, if any, for the tax cut talks over the next few months.
Yeah, John, there's a lot to talk about here because, the first thought I have is as soon as the Treasury Secretary says Donald Trump is not focused on the Fed lowering rates, we're almost near guaranteed getting a headline from Donald Trump saying the Fed needs to lower the front end of the rates. I do think that when I hear these comments, it is going to be difficult to do as much of the tax cuts as Republicans want to do. Another thing in that interview, Treasury Secretary Besson said that they should do a score that would allow Republicans to make the tax cuts permanent, extending out current baseline. If we are going to see a $4 or $5 trillion plus increase in the debt and the deficit over the next 10 years, That's more than what the bond market's been looking for. And finally, I guess the thing I would highlight here is that in Trump 1.0, everyone was focused on the equity market, and that was the barometer of Trump's success. Increasingly, clients at Raymond James have been asking me, is the bond market the new barometer? And last night, Treasury Secretary Bessent kind of made that official that we're going to be watching the 10-year to see how successful Trump policies are going to be.
And Ed, isn't that because the bond market has a seat at the table when it comes to what you're discussing, this huge tax bill and whether or not they can go as far as they'd like to go?
Yeah, and when I've talked to folks in and around kind of the Trump administration, one of the things that they want to highlight is tax cuts are only one part of the story. They want to talk about the deregulatory agenda. They want to talk about DOGE. They want to talk about the amount of money that's going to be collected, Anne-Marie, from all of the tariffs that are going into place. And so if you want to get what the Treasury Secretary is describing, I think the market has to be prepared that there's going to be other sources of tax revenue that's coming in and other cuts to the federal government spending. And so the aggressiveness that we are seeing right now by Elon Musk and DOGE is part and parcel giving political cover for the Hill to go a little bit further or a lot further than they thought they might be able to do.
Well, let's discuss how they're going to do that. Senators will sit down with Trump this weekend, and they're talking about this two-path bill. I caught up with Congressman Jason Smith yesterday, who still wants this one big, beautiful bill. But Ed, that seems to be collapsing in real time. What's your take on the next steps for the Republicans in Congress?
Well, next steps, Anne-Marie, is getting a budget. You can't start the budget reconciliation process. You have nothing to reconcile until you pass the budget. And so this is where the fact that Republicans have as slim as possible of a majority, you lose one vote, you can't get this done. So Donald Trump is also going to be having a conversation later today with House Republicans. He's going to see if he can get them to pass something to start the process. They're still fighting over process. Until you figure out the process, you can't get a bill. I absolutely still think we're going to get the tax bill done. It could be permanent. They could add tax cuts to this if they use the score that they're talking about. But until there is leadership from the White House to instruct them on what to do, we don't know what we get from the Hill until that point.
Ed, I loved how he started this conversation about how important the 10-year is and how this might be the ultimate check on the market. I thought that the photograph that we showed really set it up perfectly, where you have Donald Trump in the middle and you have Scott Bessent on one side, bond representative, and then you have Howard Lutnick on the other side, who in some ways is stock representative, growth representative, trying to get some of these other things across. Who has the louder voice, the louder influence over the man in the middle, Donald Trump, at a time where there are a lot of competing egos, a lot of competing wishes, and it's not clear just how constrained some of those people are going to be by, say, the 10-year yield?
Yeah, Lisa, I guess my flippant answer to that would be the last person who spoke to him. That's what we have seen countless times in this. He has once again instilled what we'd call a team of rivals. And we've seen this in elsewhere too. On trade, on tariffs, there is a huge match between Team Econ, which is Scott Bessent's world, versus Team Tariff. That is Lutnick. That's going to be Jamison Greer, as mentioned. He's having his hearing today for U.S. Trade Representative. That's Peter Navarro. So what I've been instructed to do when I'm listening to all these competing voices is find areas of commonality. And that's going to be the likely policy. And one of the things that I think the market has been missing is the most dovish view coming out of that kind of team of rivals on tariffs is only starting at 2.5% of a universal tariff and getting to somewhere to 10 to 20%. If that's the dovish view, I want to know what the hawkish view is.
At that point, Ed, how do you advise clients? How do you advise companies that want to make plans, want to understand what their footprint should look like, want to understand where they can expand in the world? Are you telling them to just hold off and that, frankly, they will not know just what that hawkish view is and how high it could go?
Yeah, I'm not telling them to hold off, but I am telling them to expect volatility. I was at a conference yesterday down at our headquarters in St. Pete at Raymond James talking about how volatility is back and that you have to kind of not react to everything, to get some of the big conversation right. And so there are a number of things out of this administration that could be viewed as market positive. There are other things that could be viewed as market negative. The way in which they implement that, the timing and the degree, all are going to be the big conversations of 2025, but don't stay paralyzed, because if we stay paralyzed, you miss out on a lot of opportunity. Been doing this job for a while. I can always tell you the risk, but that has not been the right strategy before, and I don't think it's the right strategy now, Lisa.
Sequencing matters, Ed. I think we've all been saying that over the last several months. We wanted to know what would come first. We found out the focus was on trade, and pretty quickly. For this market at the moment, I wonder how quickly things could change again when we really start to see what's going to happen with the tax package. When do we start to get a better idea of the contours of that? Is it going to take weeks, months? How long?
I think we'll get some idea within the next couple of weeks. As I mentioned, you have to pass the budget first. And Republicans, if we can get a budget in the February, March time period, people will get optimistic on what can get done. And then I want to see what score they're using. It's a technical thing, but if they use a score that says extend out current policy, which is what the Treasury Secretary is expecting to say, that's where we have the conversation about these tax cuts being permanent. That's not priced into the market. If we are in March and April talking about permanent tax cuts as a high probability event, that's a market positive from where I sit. It might have an impact on the 10-year that the Treasury Secretary does not want, and that might be the binding constraint. But I do expect that we will have moments of clarity followed by everything falling apart before it ultimately gets done. And one thing I say about D.C. is that things appear impossible right up until the moment they're inevitable. But I do think it is inevitable this year we will get something done on tax cuts.
Ed, this was brilliant. Looking forward to being on the journey with you. Ed Mills there of Raymond James on a path forward for the year ahead. Sonia Meskin of UBS dropping by for more. Sonia, good to see you.
Good to see you.
What are you looking for from tomorrow's number? And to Jonathan Pingle's point of Natixis, why is January so hard to forecast?
You know, January tends to be quite seasonal. There's also weather effects as well. So we have this impact of seasonality, and we've had this historically, I think, for at least a few years, that is amplified in January compared to other months. But in addition here, we're going to have benchmark revisions. So the underlying assumptions of how we're estimating data might change as well from the Census Bureau. So we're looking for 200K, but really, as we've published, this is just an exercise in predicting noise.
An exercise in predicting noise. We should collect these. An exercise in predicting noise and a random number generator. This is fantastic. I am curious about what your takeaway is, just more broadly, from the random number generator or, exercise in noise. The stagnancy of this market, that's not stagnation of this market, the idea that we're not seeing a lot of hiring and we're not seeing a lot of firing. Do you take that as being implicitly a negative, suggesting a brittleness that makes this labor market more susceptible to some sort of shock? That's the way some people have been describing it.
Well, that's possible, yes, and tariffs could be one of those shocks, actually. And we would expect the unemployment rate to go up if the tariffs against, Canada, Mexico, China are, in fact, sustained, especially Canada and Mexico. But on the other hand, the U.S. is doing considerably better than the rest of the world, so that is a strength for us, of course.
JP Morgan had this survey, and they talked about inflation and tariffs have the biggest impact on markets in 2025. I know we're just joking here, but in all seriousness, does it even matter what the non-farm payroll number is tomorrow?
In terms of the exercise in predicting noise, probably less so. Well, of course, in a sense, we would expect, if, for example, the number comes in considerably lower than what the market expects, I would think the market would react, of course. Now, if the number comes in close, as usual, folks are probably going to look through it more and refocus on tariffs.
Well, okay, so let's talk about tariffs then. You don't think Canada and Mexico get implemented. But we still have China. This is just the opening salvo, Trump said himself, and he says he's going after the European Union next. How do you think about tariffs for the rest of the year?
We would think of it as if they were to get implemented. There are really two ways to think about it, right? Two paths. One is just the threat of tariffs that is causing uncertainty already for businesses. And we've seen this in the ISM manufacturing survey, for example, ISM manufacturing as well, and others regional surveys. And the other one is the actual impact of tariffs if they were to get implemented and they had staying power. And in the latter case, it's a bit easier to estimate, though there's still considerable uncertainty, we would expect a bigger hit to growth than inflation, actually.
Something largely absent from this conversation, and absent, I would say, from the news conference with Chairman Powell in the past week. Why no conversation about the fires in Los Angeles and the disruption we all expected in the economic data? What happened to that story?
Well, that's it's a terrible tragedy, of course. But unlike the staying power of tariffs, we would expect there to be rebuilding exercise and reversion to trend from a hit like that.
So you're not expecting any disruption in the economic data in the weeks to come?
We are expecting this to show up in part in the NFP, for example, later this week. But we're not expecting this to be in effect for the rest of the year necessarily. That would persist.
Got it. Sonia, it's good to see you, as always. Sonia Meskin there of UBS on the data we get tomorrow. Reid Hoffman, the co-founder of Manus AI and author of Super Agency, What Could Possibly Go Right with Our AI Future, joins us now. Reid, it's good to see you.
Great to be here.
I said as you walked into the room, that is a book I need to read. What could go right? Because I'm very worried about what things could go wrong. Let's put it that way. You, in the book, approach something really important. That as we make these technological revolutions, these advancements over human history, actually it benefits human agency. And I'm worried that maybe with AI, it goes in a different direction. Help me out and tell me why it could go right.
Well, the short answer is it gives you superpowers, right? And it gives you superpowers across a large number of things. Everyone should go try ChatGPT, Inflection's Pi, Anthropic's Claude. Give it a try. You can find what should I make for dinner? How do I get medical advice that's available to me? How might I have a difficult conversation with a colleague? How might I actually do things in parenting that might be different? All of those things are superpowers that we get.
Are you throwing Lisa under the bus?
I am.
Lisa, do you want to share with the audience what you do?
You can manipulate what your kids look at if you send them links to things that then change their algorithms that then give them more news feeds in their feed. I mean, there are ways that you can kind of play the system a little bit, and I think that that's proper.
Yeah, exactly. And by the way, it helps them learn. It gives them news about the environment around them. I mean, this is one of the things. If you're not actually, in fact, using these AI agents to learn right now, you should. And like, for example, one of the ways that I do when I approach a difficult subject, say, for example, quantum computing, I stick a technical paper in, and I say, explain this to me like I'm 12. Superpowers.
Superpowers.
Yes.
Okay, so my next question was going to be, how should we participate in how we shape this intelligence? And Lisa has given us one idea. Could you give us another?
Well, I think part of the key thing is that my very first chapter is about ChatGPT, where humanity enters the chat. You've got hundreds of millions of people who are interacting with it, and the company watches what works and what doesn't work, and then improves it. So by simply going and experimenting and getting which kinds of things are the things that help you elevate your agency, then actually, in fact, helps the company know, oh, these things really work. Oh, these things need to be improved.
At the same time, you talk about technical papers. And one thing that AI does really well is work with technical details. Not so much the social. Not so much when you have to have certain biases that are baked into some of these algorithms. What are the limitations to this in sort of broad-based application at a time where people are saying this could do qualitative jobs and there could potentially be a lot of biases baked in?
So every major group is working intensely on biases. And actually, one of the things that we did with Inflection and Pi, personal intelligence, pun intended, was to teach it to be kind and empathetic, to have EQ as important as IQ. And actually, you see that now in Anthropic's Claude and other things as it's kind of spreading. And so you can actually have these kinds of interactions, be trained in them, and this is kind of reinforcement learning by human feedback, to actually be much better than your average human.
The reason why I find this so fascinating is because I think about my children and what careers they potentially could have. And I'm like, no, not programmer, because that's going to be dead. All of these other ones, probably if you can be empathetic, human, those human skills are probably going to be more needed. That's what people are saying. Are you saying those two are going to go out the window? I mean, what does this do to employment?
So first, I actually think programming skill jobs aren't going out the door. I think there's human amplification, but I think it's also human amplification of like EQ as well. So the fact that you have for example, say a medical assistant that can help you with something, or a coach that might be able to talk with something, doesn't mean you don't want a human coach. It's more coaches the better, right? And being able to make it work.
You're talking about AI for the good.
Yes.
But what about AI in the hands of adversaries?
Well, so superpowers for terrorists, superpowers for criminals, superpowers for rogue states. That's one of the things that we need to be careful about how we navigate. Once again, all of the major groups actually have security groups that are working on this to try to make sure, and that's, I think, part of the having so-called red teaming plans and kind of trying to make sure that that's as minimized as much as possible.
But how do you think the U.S. government should be approaching this? The market's freaked out because of DeepSeek and how much potentially the CCP is putting money into their version of AI. But when you're in China and you want to look at things on DeepSeek that are potentially critical to the CCP, it will not show you. So how does the U.S. government go about this?
Well, so I think it's important that the U.S. government kind of continue some of the threads that the previous executive order did, which is, you have red teaming things that you actually do world leadership about what kind of things are happening. I mean, there's connections in the UK AI Safety Institute and the US one and the French one, and I think these are important to do. But I think that this is one of the things where there will be multiple AIs, and part of the reason why I want AI not to just be artificial intelligence or amplification intelligence, but also American intelligence as part of what we're doing.
What do you make then of the tech industry being very close to this administration? I'm not just talking about your former friend Elon Musk. I was at the White House yesterday and Bill Gates was walking into the West Wing for meetings. Do you think they can help the administration basically get to there faster when it comes to safe AI?
In the short, absolutely. I think it's, if you said of any kind of Western democracy government in the world, most especially, of course, American presidency, American government, should they be connected with the tech industry, talking about how tech's creating the future? What are the things that we can do to make better American industry, better American society, better lives for American citizens? The short answer is absolutely.
What do you make of the backlash against Elon Musk more recently about his involvement with government?
Well, in government, the move fast and break things maybe should be, a little bit more compassionate and judicious.
Is that what you think the approach should be?
I think that the question should be is trying to say, hey, look, there's a reason government doesn't work like companies, even though I think there's efficiency that's really good, and we need to respect those reasons too.
Do you feel that you're going to basically get some sort of repudiation because of where your politics were ahead of this election, and given how Trump has basically cozied up to a lot of individuals in the tech world? I have not seen you yet at Mar-a-Lago at inauguration or walking into the West Wing.
Look, I think the thing that we most want as American citizens is for our government to succeed for our industry, succeed for our citizens. And so that's what I most want. And I think we all do.
You have been an incredible investor. You were an early investor in OpenAI. You invested in LinkedIn. Just so many of the behemoths currently. Do you see a lot of upstarts right now that look like they could become the next big thing in some of this machine learning technology?
So the short answer is yes, although picking them is one of the difficult things about being a venture capitalist, and there's a lot of different options. Back, a few years ago, I was arguing that we were 5 large tech companies heading to 10, but I wouldn't necessarily have predicted that NVIDIA would have so quickly become one of those, into the 7 and then going to 10. And so I think we are in that progress, and I think there are a number of startups that are creating amazing technology, and then the question is product market fit at scale.
What do you think the next technological evolution is going to be that could potentially be a sort of ChatGPT moment or a DeepSeek moment or one of these sort of breakthrough ahas?
One of the things I think we're going to see this year, all of the major AI companies are working on amplifying coding. And one of the things, like, for example, for your kids, other things will be, yes, you have to bring up, will be actually, all of us will have a software engineering assistant, and that will make all of our work a lot better. And that's one of the things I think hasn't yet entered the consciousness. So I think that's one of the things that's coming. And then, of course, with what I'm doing with Manus, I'm hopeful that we will have some really great early results in curing cancer.
And how we can accelerate the scientific process. And I think we're all up with you on that page. I hope you're very successful. Thank you, sir. Really appreciate your time. Thank you. It's good to see you. Reid Hoffman there of Manus AI and a whole lot more.
This is the Bloomberg Surveillance Podcast, bringing you the best in markets, economics and geopolitics. You can watch the show live on Bloomberg TV weekday mornings from 6 a.m. to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.